China has announced new tariffs on a range of U.S. goods. This move comes after the U.S. imposed its own tariffs on Chinese imports. The Chinese tariffs target key American products. These include coal, liquefied natural gas, and crude oil. The tariffs also affect agricultural machinery. Large displacement vehicles and pickup trucks face higher import taxes as well. China's decision marks a significant escalation in the ongoing trade dispute between the two economic giants. The tariffs are a direct response to U.S. actions. The U.S. imposed a 10% tariff on a wide range of Chinese goods. This action was taken on February 2, 2025. The Trump administration cited several reasons for the tariffs. These included concerns over undocumented migrants and drug trafficking. The administration argues that these issues justify the use of tariffs as leverage. China's decision to retaliate with tariffs of its own has raised concerns. Businesses and economists worry about the impact on global trade. The tariffs could disrupt supply chains and increase prices for consumers. The escalating trade war threatens to harm both economies. It also injects uncertainty into the global market. The situation remains fluid, with both sides carefully watching the other's moves. Further escalation is possible, especially if no agreement is reached soon. It remains to be seen how this latest chapter in the US-China trade war will unfold. However, one thing is certain: the stakes are high for both nations and the global economy. The Trump administration's decision to impose tariffs on Chinese goods is the latest salvo in an ongoing trade war. The tariffs are part of a broader strategy by the US to pressure China on trade. The administration argues that China engages in unfair trade practices. These practices, they claim, harm American businesses and workers. The U.S. has long accused China of intellectual property theft. They also point to forced technology transfers as a point of contention. Additionally, the U.S. criticizes China's massive trade surplus with the U.S. The Trump administration believes that tariffs are a necessary tool to force China to make concessions. However, the tariffs have been met with criticism from various corners. Many economists argue that tariffs harm both economies. They contend that tariffs raise prices for consumers and disrupt supply chains. Businesses also express concerns about the impact of tariffs on their operations. Despite the criticisms, the Trump administration has shown no signs of backing down. In fact, the administration has threatened to impose even more tariffs if China does not meet its demands. The escalating trade war has created uncertainty in the global market. This uncertainty threatens to undermine economic growth. The current trade tensions between the U.S. and China are not new. The two countries have a long history of trade disputes. These disputes often stem from the significant trade imbalance between them. The U.S. has long had a large trade deficit with China. The trade war escalated significantly in 2018. Then President Trump imposed tariffs on billions of dollars worth of Chinese goods. China retaliated with tariffs of its own. The back-and-forth tariffs continued for months. This tit-for-tat exchange harmed both economies. In 2020, the two countries signed a Phase 1 trade deal. This agreement offered a temporary truce. China pledged to increase its purchases of U.S. goods. However, the deal did not address many of the underlying issues in the trade relationship. The COVID-19 pandemic further strained the relationship. The arrival of the Biden administration in 2021 brought hopes for a reset. However, the new administration largely maintained the tariffs imposed by the previous administration. Negotiations between the two countries have continued, but progress on resolving the core issues has been slow. The latest round of tariffs marks a significant setback in the already strained relationship. The future of the U.S.-China trade relationship remains uncertain. The latest round of tariffs has heightened tensions. The path forward is fraught with challenges. Finding a resolution will require both sides to make concessions. Dialogue is crucial to easing tensions. President Trump's planned discussion with Xi Jinping is a positive step. Open communication channels can help to prevent misunderstandings. They can also pave the way for a potential agreement. However, finding common ground is proving to be difficult. The two countries have fundamentally different views on trade. The U.S. emphasizes free markets and reciprocity. China, on the other hand, prioritizes state-led economic policies. The outcome of the current trade dispute has far-reaching implications. It will not only impact the U.S. and China, it will also shape the global trading system. Resolving the trade war is in the best interest of both countries. It is also essential for global economic stability. Gabriel reporting for TB Bar TV. Don't forget to like, share, and subscribe for more.